All right. Good morning. Good morning. How we doing? Got a little bit of a late start here, but let's get it going.
Welcome to the show, it's Mortgage Talk. Grab a coffee, sit, and let's unlock the dreams you've got, the place you crave. From the front porch swing to the hidden cave. Talk about your home, talk about your plan, talk about the future where you'll stand. Your mortgage, your dream, your story to give. Let's talk about the place where you wanna live. Got questions? Here's the place to be. A TikTok live mortgage jubilee. Fix or float, we'll break it down. From city lights to your small town.
All right. Good morning, guys. I'm just kind of doing a little bit of technical deal here. I'm trying to get my display up because we were talking yesterday about showing a really good deal as far as interest rates go. And I think I got that figured out here now where I can do this again. But as I get started here, I will introduce myself. My name is Kenny Murden. I'm new to TikTok. I'm not new to lending. I've been lending since 1999. And I've been an excellent resource for both loan originators and real estate agents over the years to help them structure the deals that they have, which makes me more than capable of being able to answer any questions that you might have if you have any questions that are mortgage or real estate related. Oh, Alex, if you're here, yeah, I got your text message, and I'm totally in for the car rental. So let me know whatever we need to do on that. I'll text you back here in a bit. But thanks for joining Mortgage Talk with Kenny Murden. And feel free, actually, Alex, if you want, you can certainly jump on as a guest, and we can kind of talk about the advantages to working with somebody here in the DFW area that's dually licensed. So what advantages do you, the consumer, get if you work with the same person that is the real estate agent and the loan officer, because they have both licenses, and how might that benefit you? There's a lot of different ways, but yeah, Alex, if you wanted to jump in, by all means, just hit the invite or the request button, and I'll pull you in. But anyway, talking about, I don't want to just say, hey, we have a fantastic, rates and things. So what I like to do is show you. The proof is in the pudding. So what I'm going to do here is I'll pull this up. Oh, Alex says he doesn't see the request button. Well, let me hit multi-guest. Maybe, problem might be me, right? So let's see, invite. There, now I invited you. So hopefully you see that. And if you did, come on in. There you are. Ladies and gentlemen, Mr. Alex Hutchins, how you doing?
Good. How you doing? Thanks for inviting me in.
Yeah. So what I was showing people here is kind of one of the advantages of working with a mortgage broker. And most people don't know there's a few different types of lenders. When it comes to getting a mortgage, there's really three categories that people are in. They're either going to be working with a mortgage broker like us, or a correspondent lender, or retail. And retail is where most people understand how that works. You just go into your local bank, right? And your bank might also do mortgages. Well, technology and specialization has kind of come in and taken over, where the consumer is getting such a much better deal by working with somebody that can basically shop for you. And we're going to talk a little bit about the differences. See, Jenna says, thoughts on a 7-1 ARM if you're financially responsible and plan on refinancing within a few years. Absolutely. If your plan is to not have the loan for the entire fixed period of an adjustable rate mortgage, then it absolutely makes sense as so long as it saves you money over the 30-year fixed, right? So it's still going to be amortized over 30 years. So if you're going to get that reduction of rate, which a lot of times we're seeing that now with the way that rates are set up, then you have your fixed period for 7 years. But then we can also get into what if it's going to make sense to hold on to that for years 8 and beyond, right? It doesn't automatically go up. A lot of time adjustable rate mortgages adjust down. So that's just another thing to keep in mind. But absolutely, if you're only planning on having the loan for a few years and you're fixing it in for 7, it's a safe play. So excellent question. Thank you. We chose that, but we're nervous because we like safe. So that's helpful. Yeah, absolutely. I mean, the adjustable rate mortgages got such a bad rap, in the lead up to the financial crisis in 2008. And the reason why they got such a bad rap is because they were, they used the term predatory. And I do not disagree with that term because the way that an adjustable rate mortgage adjusts is you have the index, which is the market, the bond market, and then you have the margin. Think profit margin for the lender. And then after the fixed period, so in this case 7 years, in year 8 and beyond, you're taking the index and the margin to get what your next rate will be. And it also has different things like caps where it can't go too much in the first adjustment, whatever. We're not going to get into the weeds on that. But just to understand that it's basically A plus B equals C. And so the way that the bad adjustable rate mortgages were set up in the lead up to the financial crisis, the profit margins were set so high that no matter what happens with the bond market, when it comes time to adjust those rates, they're going to go up to the maximum. So like you were absolutely going to go up. But I bet you with your adjustable rate mortgage, your margin is probably something like 2.25. And so you take that 2.25 plus whatever the index is to get whatever the market rate will be in years 8 and beyond. And they fix in for either 6 months or a year, depending on what you're into there. So it's a much safer play than it was back in the lead up to the 2008. Jenna says, yes, I believe it's around there. So absolutely. So they are scarier because of what they used to be, but we don't want to be afraid of the boogeyman if it's really just a kitten in the closet, right? So right now you have a kitten of a deal, right? So it's not something that's very scary. The more you understand it, the better you're going to feel about it, as far as taking it long term. But I think you're right. I think what's going to end up happening is interest rates are going to continue to come down a little bit, especially watch what happens after March. The question here was, what DTI are we looking for? Typically, we want to see a DTI less than 50%. There's some that goes up higher, some, at 57% for FHA, or, it's really unlimited. For VA, they look more at residual income and not so much on debt to income ratio. Anyway, Alex, I wanted to get back to you. What are some of the advantages of working with a real estate agent that's also a loan originator when it comes to buying a house, whether that's right here in the DFW area or anywhere coast to coast, sea to shining sea?
For me and my clients, the best thing is that I am able to know exactly what's going on with their loan. Whereas a lot of agents, they get frustrated when, things aren't progressing the way they think they should be. And they're calling the loan officer and the answer they get is, well, it's still an underwriting and we have to wait. Whereas as a loan officer, I can see exactly what underwriting's looking at. And I can be honest with my client and say, look, you need to get these documents, or we're waiting for the appraisal to come back, or, whatever is holding it up at that point, and setting expectations up front and letting the people know, say, look, I'm going to make sure you get the best deal possible. Also, that's another thing too, is loan officers that get the best deal for them, I want to say. So someone might, their loan officer might tell them, hey, let's get you this FHA loan because it has a lower interest rate, but the costs are more than if they just got one with conventional at just a slightly higher rate. The overall out of pocket is going to be more sometimes on that FHA than the conventional, depending on how much down payment they might be doing or whatever. So making sure that my client financials and the fiduciary duty I have to make sure that when they're buying this house, that they're not breaking their bank to do it.
Yeah. So the one key thing though, when you're saying that, you're able to advise them, right? So you have more information on both sides of both real estate and mortgage. But the key thing that I would hone into there is one point of contact. So the key thing now, the advantages to you, the consumer, are sometimes a little bit obscure. Like you don't really even understand what the advantages are. But if you're going to go out and offer on a house, that listing agent that's receiving that offer might perceive a single point of contact as a big benefit. So if they're going to get an offer for the exact same money and you're being represented by one person rather than two, that might be something that pushes you over the edge to get your accepted offer. So that's an important thing. Did Lane Kifflin make the right move? Teddy, tell me more. I don't know. Let me look it up. Lane Kifflin. What are we looking at here? Leaving Ole Miss for rival LSU. So yeah, this is a question about some football, college football. Like I have no idea. Like you're more than welcome to jump in on that, Alex, if you have any insight on college football.
I don't follow college football that well. I watch my alma mater, and that's it. And University of North Texas, go Eagles, 11-1 this season right now. First ranking in the ACC in 59 years. So I'm actually proud of them this year. So, I mean, I've always been proud of them, don't get me wrong, but they're doing a great season this year. So that's all the one I follow. But I couldn't tell you any of the players' names, coaches' names, or any of that stuff.
Nice. And that lone girl says, hey, you two troublemakers. Good to see you, that lone girl.
Keep it Madison.
Anonymous. I know, but I'm just assuming she's wearing the incognito glasses and the trench coat going undercover, So yeah, no, there's, we work with such a great team of guys and gals over the entire country. So what I tell folks is I'm able to help kind of answer structural questions and things like that, problem solve with loans. But if I am not personally licensed in the state that you require assistance in, still reach out and we'll get you teamed up with the right person. Because I know, like, for example, that lone girl is out in California, also licensed in several other states. I'm licensed here in the state of Texas and Minnesota, and I'm able to help, a lot of people just, I'm basically a really good resource to make sure that you're going to get the best deal, not only on the mortgage, but also on the real estate. So I definitely say reach out and we can certainly help with that. But yeah, some of those other advantages as far as, like you were talking about, streamlined communication, one point of contact, it could be a perceived benefit by the listing agent. So if all things being equal, you might have your offer accepted working with that one point of contact rather than two. So some of those things are a good advantage, but also sometimes, not always, but sometimes when you work with that one point of contact, sometimes it can be a discount. So I can't say that specifically, but what I can do is take another sip of soda.
I will say, as the dual licensing, I will make the deal work. So
Jen is asking, is it appropriate to ask my lender if we can get a clear to close earlier? New houses unoccupied, and we can move our boxes early if we get a clear to close. Absolutely. If if the lender is worth their salt, they're working towards that clear to close. They're not working towards the date that you're supposed to be, closing. So if I'm working with a processing team and they consistently are saying, oh, well, we don't have to close until, the 30th or whatever, and they're not pushing for that clear to close today, they're not my style. We're not going to work well together. If I can get somebody clear to close early, that's exactly what we're going to do, because we want to give you the option to move that closing date up. And so it's super appropriate to not only ask it, request it, but expect it. So that's a very good thing. You guys need to jump on our podcast call at 11 a.m. this morning. Now, Pacific time. Thank you. I was going to say, because I'm here in Central, but you're in Pacific. So somebody with time zone math, what's 11 a.m. Central time? What is that, 1 o'clock?
1 o'clock.
1 o'clock. All right.
One
So
Central.
I definitely don't do math in public, and I super don't do time zone math in public, because I really struggle with which side of the earth the sun comes up and goes down, apparently. Katja is here. That's another gal that I'll be introducing you guys to here in the short, I'd say the near future. That's very good to know. So helpful. Absolutely. I appreciate the participation this morning, Jenna. It's been really helpful, and I think it's so much easier to come on here when there's more interaction. So I really appreciate the comments and encourage anybody to come out. If you have comments or questions, both are welcome. Both help spike the algorithm. Like I say, I'm new to TikTok, not new to lending, been lending since 1999, but because I am new to TikTok, I do forget to ask you to do all, play around with all the buttons. If you like what we're doing, like it. If you know anybody that might be looking to buy or refinance, share it, follow the channel. Thank you, That Lone Girl. Comment, save, favorite, all whatever the options are. If you play with the buttons, we are best friends immediately, and I thank you very much for that. But going back to what I wanted to show you guys, let me pull this up. All right, above my head right now, I have something that's called Loan Sifter, and this is something that is in the let's see, awesome, thank you guys. So this is something that I just wanted to show you the pricing. So very typical deal that I'll run into would be an FHA 30-year fixed. I'll call it a $400,000 purchase price with 3.5% down. And I'll call it a 680 credit score, which is just kind of mid. It's kind of good without being great. And it's, on the, I'd say, what do you say, on the higher side of fair, right? Something like that.
Yeah.
And I'll put it right here in Texas. And I haven't priced anything out in a while, man. I've been on vacation with this Thanksgiving holiday that they put on last week. And, man, I just kind of got checked out. So I haven't seen this in a while. Oh, and also this I don't know if you can see what I did here with fees in, where I checked that box there. If anybody is familiar with junk fees, what that means is we're not going to be charging any junk fees. So anything that you're going to have as far as a lender cost is going to be a discount point, and it's going to be tax deductible. And that's the reason why I do it that way. D-Money says, have a question about how to come up with a down payment on a vacation property. I have some, I'm cash poor right now. D-Money, I have some insight on that and investment properties for you. I'll talk about that in a second here, but right now I want to price this out real quick. And I'm looking at a 5.625 interest rate with a bit of a credit. And then if we wanted to look cheaper than that, credit meaning that you're going to have no lender costs. Instead, we're going to be giving a credit to offset things like your appraisal, your title fees, and stuff like that. But you're probably already going to be running into people charging that rate and adding cost. We're taking costs away. But if I was going to look at something to be a comparable thing that somebody's going to say, if you're going to have about a 1% cost, and they're going to be adding things like, underwriting fees and things, and we're not we're not adding any of those junk fees in there. Then we're probably going down to, let me take a look and change the rate down to 5.375. And I haven't looked at the yield. Okay, this is a half of a point. Let's take a look at 5.25. And you see, yeah, I don't know if you can see it. I probably need to blow it up, but you know, the cheapest lender changes just by me changing the interest rate. So like they're all over the place as far as you know, who's going to be the cheapest for whatever scenario. And that's what I mean by I can really drill down and get you the best deal. And so yeah, right here at 5.25, you're paying a little less than a point in discount points. So at 5.625, you're getting a credit, meaning you're cheaper than par. And then at 5.25, you're paying a little less than a point on that kind of a scenario. So if you have a loan scenario that you want to go and you're like, hey, don't just tell me that you have fantastic pricing, show it to me, jump in the comments, talk to me about your deal, and I'll price it out for you. Okay, I need you to show me how to do this on TikTok. LOL. You know, guys, it's so freezing here in DFW. I have this big hoodie on, but man, my oh, Crystal just showed up. How's it going, Crystal? Hope all is well. But yeah, I am just I turned the heat way up, so now I'm starting to roast. So bear with me. Nobody hit the like button too many times, and that's why I'm taking my shirt off. That's not what's happening here. I'm just a little bit warm. Alex looks like he's a little bit cool as well. He's got his winter coat on, looks like.
Well, I took the coat off. I still have my hoodie on.
But it's freezing, isn't it?
Yeah, it was under 30 degrees this morning when I left the house. So.
All right. D-Money says he makes $500,000 a year, but he's cash poor. What is going on, D-Money? You must be investing a lot, is my guess. But he wants to know, how can I buy, what was it, a vacation home? Yeah, vacation property. Oh, 4 kids in college. No, say no more. I'm right up there behind you. My 3 are in high school, and they're starting to bleed me with, you know, the insurance costs and driving, and I do invest a lot. Awesome. So I mean, I can't give it in investment advice, right? I'm no longer you know, a financial advisor. I had those licenses back in the day, but if you want to reach out, call or text me, my phone number's above my head, then you and I can have a one-on-one conversation where I can tell you some things that I'm doing. If you want to know about the wheel strategy, or having AI kind of trade some stuff for you using automation, those are some things that I'm personally doing with some success. But as far as being able to pick up real estate with very little money down, the trick is finding not just the right property, but the right seller. And what I mean by that is if the seller is willing to carry back some of the loan, where, you know, if we're able to, you know, let me just say this on the investment. It might be even better on a vacation home, a second home. You'll probably be able to do this with less money down. But the way to get an investment property, if you have a seller that's willing to carry back 40% of the purchase, right? So if you're looking at a $300,000 place, they're willing to hold back $120,000 that they're not going to get paid, but you're going to pay them $180,000 right now, and then you're going to make installments on the rest. If they will agree to that, you're going to be able to come into that property with very little, if no money down. And the way that we're going to do that is I'll be able to supply 50% of the deal, and then that other 10% can come from anywhere, because we're not going to source it or season it, meaning the underwriter doesn't care if, you know, if the money was gifted, borrowed, or if it was just cash laying around in your bathroom floor. Like, it doesn't matter where the money came from. So what that means is what could happen is you can get a personal loan or a hard money loan to borrow that 10%. and then you're borrowing the 50 and they're carrying back the 40, that all equals 100%. And now you ended up controlling a property with no money down. So that's the strategy behind being able to pick up investment properties and go boom, 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 boom. But you're looking for motivated sellers. Are there motivated sellers right now? Absolutely, all over the place. This is the perfect time to implement a strategy like that. So if you're an investor and you want to quickly pick up a real estate portfolio, now is an excellent time to get into it. But the downside is when you finance everything, it's going to be expensive. So your cash flow is going to be a little bit stretched. So you want to run the numbers, make sure you're going to be cash flow positive. And as long as you're cash flow positive, even a little bit, then you can just go there and rack them and stack them, pick up as many, you pick up 100 properties, right? Doesn't matter because you're not being strapped by the down payment, where typically you're going to run into a down payment issue if you're going to try and become a real estate investor. But if you do it this way, if you work smarter, not harder, you're going to be able to pick up a lot of property. So definitely like to get in that situation right there. But also, as I was talking with Alex, this is a little bit of a pivot here. We're going to talk about a different thing. So if you or somebody you know is in the business, if they're a real estate agent, if they're a loan originator, definitely reach out to me or Alex, and we can invite them on. So Alex and I are going on a little trip, a fun little free trip up to the headquarters of UWM up in Detroit, Michigan. And they cover airfare, hotel, light entertainment, transportation, all that good stuff. I think we're going to skip the transportation, though. We're going to rent a car. Is that right? So,
Well, we still have to get our own transportation from the airport to Pontiac.
No, it's included.
Since when?
Since always for this particular company.
Oh, because the emails I got said, go here to schedule your stuff, and then they have prices. So
I'll get you the link to sign up for the shuttle, and then, but the reason why I would still do the car rentals because I'll Uber around to,
yeah.
I'll do
Every time I've gone up there, I've always had to get my own transportation from the airport up to Pontiac.
Yeah, this is different. So
Okay.
maybe that changes things. Maybe it doesn't. I don't know. But nevertheless, if you're a real estate agent, if you're a loan originator, and you want a free trip up to the frigid cold Detroit, Michigan, or if you want to wait until it warms up the other part of the calendar, reach out. We'll get you up there, or we'll get your friend up there or whatever, and they'll have a good time. So wanted to throw that out there as well. Other than that, what have you been running into? You've been running into more refi or purchase? What are you seeing out there?
I'm actually getting more purchase right now for
Really?
some reason. People are starting to buy again. So
Neil says, realtor in Alabama. We accept Alabamans. Is that? I don't know. What's the term? What is somebody in Alabama? Actually, a good processor friend of mine was up at the last trip, and she's from Alabama, and so yeah, Alabama's welcome. So if you want a free trip, hit us up. We'll get you up there and have a good time. And when I say, you're going to have like 2 days of classes, you're going to have a lot of time to network with loan officers and real estate agents. You're going to walk away. You're going to learn something new, maybe a little something about AI or something like that. And then, so you're going to be able to better yourself, but you're also going to have that light entertainment. So if you're like me and you enjoy an open bar and some, axe throwing and I like foaling, they call it. So they set up some bowling pins and you throw footballs and whoever knocks them all over the first wins. So basically fun. If you like fun, then definitely hit us up and we'll get you out to the next one. But you were saying you're running into more purchase than refi right now. Is that right?
yeah, I've got 2 purchase loan applications in right now.
Yeah.
I've been trying to get some refis, but a lot of people, I don't know what they're holding off for, at least in my sphere. So
Neil saying, getting a lot of questions on DSCR and hard money from both buyers and sellers. Yeah, that's definitely the growing sector. So like ever since COVID, where rates were down, around 2-3% or whatever. 2022 hit, interest rates went way up. That contracted the whole mortgage market, but the only segment that was growing was the segment that is like the DSCR and the investor stuff, all of that kind of stuff. Thanks for sharing, by the way. That's very helpful. Appreciate that. But the DSCR, we also do like no ratio, meaning we're not going to look at any income whatsoever, right? So a lot of times DSCR doesn't work because there's not enough rent being generated from the property. But if they want to still pick up the property anyway, because they might have some vision for it, maybe they're going to change the thing into, I don't know how people are going to change stuff around. But a lot of times, like, let me give this example. Let's say it has a big ass garage. And so you can't really put on the DSCR that you're going to be renting out the storage in the garage separately, because you don't need to supply the garage. There's nothing in the contract that says you must give them the garage. So if somebody's like, you know what, I'm going to rent out these units and I'm going to use a different function for the garage, whether it's to rent out the space or to use it for a different kind of a business or whatever, that investors got the creativity going on. They want to pick up the property for less than what they're going to be able to get in the residential rent, then we're going to give you that loan with no ratio, even if it doesn't qualify, for the payment on a typical DSCR. So that's one thing to note. DSCR is not all built the same. Sometimes they require so much rent to be able to not only make the payment, but a certain percentage over the payment. Even if the rent doesn't cover the payment, there's still an option to buy it, is what I'm talking about there. We get, including this very channel, there's a lot of hard money type folks that come on here, and I've been introduced to at least a handful of some hard money folks. Now, hard money is kind of a tricky thing because it's not like guidelines and a matrices where I can know exactly what it is that the lender is looking for to be able to offer you the solution. So it's a little bit of a trial and error. And so I've had good and bad experiences with hard money investors when I make those connections. I'm willing to pass the names and numbers on so you're able to kind of like do some of this stuff. Oh, Neil, here's another really important thing for you to understand. All of these business type loans, they don't typically require a mortgage license. Think about that. So if you're a real estate agent, right? What if you could get the mortgage side of the commission on the deal and you don't even have to get your mortgage license? So we can talk more about that as well. So the number at the top, call or text me. And, it's not a huge learning curve. So if you wanted me to kind of walk you through it and maybe be kind of a loan officer assistant where I'm kind of helping you do the work, I'm teaching you how to do the work on running the loan, you get the bulk of the commission on it, and I'm just getting a little thing for advising you. As a loan officer assistant, we can set it up any way you want. But a lot of these business purpose loans, you don't need a license. Now, should you get your license? Should you become duly licensed and start having some greater success on a dual income, essentially? Yeah, we have some more creative ways of being able to do that if you get the license. But and we'll even help you get that mortgage license for free if there's a path where we can help you do that. So definitely reach out. I'd love to connect. Then also for those of you like D Money that are out there just looking to buy property, if you have questions, if you have loan questions about pricing, about different ways to structure deals, throw it all in the comments section, and you will guide the conversation. That's the benefit of these live shows. And I'm on 2 hours a day. I'm on from 10 a.m. until 11 a.m. Central Time. I'm also on from 4 p.m. to 5 p.m. Monday through Friday, with a whole bunch of exceptions. The exceptions are things like Thanksgiving, or if I don't feel like it, if I'm sick, if I'm lonely. So with any of those exceptions, but I pretty much stick to that schedule. Outside of a lot of exceptions, Monday through Friday, I'm on at these times. So let's see here. Personal. Let's see. I just got a couple text messages, and thanks for saying that you sent. Okay, then I got your text here. This other one was talking about a hard money inquiry for a $250,000 deal. Let's see. So yeah, Catherine, I got your text message. I will reach out to you after we're done here. Let's see. Kind of help me. Ooh, one thing. Hey, Alex, talk to the people. I have to approve a CD for my closing today, real quick. Let's see.
Yeah, so I'm going to go on the DSCR stuff. Kenny was just talking about too. Is there are a few states that do require lenders to be licensed for those, but Texas and most of the states are not. So if you've got people, investors, if you're an investor, take advantage of that and be the referral person and help put that together, and you can get paid on it. But what I like about the DSCRs, I have one on one of my rental houses, and it's nice because you don't have to guarantee. Well, I guess you kind of guarantee it, but they don't have to get all your personal financials to do those. It's all based on the property. So when you're applying for those loans, you show your rental rolls, you show the corporate documents, and everything goes off of that for approval. And then interest rates are typically maybe a point or more than par. So the rates are usually still pretty good with DSCRs. And then the one I have has a 1% ratio, but like Kenny was saying, now they got them down to 0%. So it's nice because you don't have to jump through a bunch of hoops to get those done, and it doesn't affect your credit. So it's all on the company, and you do it under an LLC. You don't ever do them under your personal name.
Oh, you're cutting out too on your mic there, but hopefully
I was just saying,
hopefully
do
this
it
back. It's cut out, but anyway, appreciate you carrying that for me a little bit. Had a closing I had to approve a CD, a closing disclosure for. So we got a gentleman up in Minnesota buying a house today. That's an excellent thing. I always celebrate the wins. They got dumped on a bunch of snow up there. It's been cold down here. I don't know about y'all, but I don't appreciate winter. That's why I moved down from Minnesota. But
and then we're going to Michigan next week.
And we're going to Michigan next week. But I just I don't know, man. I've never been a fan of winter. I feel like I didn't move far enough south. I maybe just went about halfway, and I need to go another 14 hours south, wherever that lands me. Probably in South Texas. South Padre. Yeah, that's where I'll be, man. I can deal with heat ever since the invention of air conditioner, but I'm not a fan of the cold. And so, like I said, I cranked my heat way up, and I had to take my hoodie off because I think I got it up to like 76 in here, and I'm starting to get a little bit of a good, it's definitely a slow roast in here at this point. I don't mind turning on the heat so high I need to turn the fan on. I just don't want to be cold. So that's my bag. I've been seeing more refi than purchase. Let's see the question here. What's the VA down payment and FICO guideline? So obviously VAs, no money down, and they don't have a FICO requirement. The VA doesn't have a FICO requirement, but the lenders do. So some lenders are going to say they require, 640 or a 620 or a 600. Most of our lenders that we work with, because I work with over 200 lenders, most of them will have a minimum requirement of a 500 credit score, and a few of them don't. So the lowest FICO score that I've personally closed was a 468 credit score for a VA deal. Now that's a little bit unique because if you have a really low credit score, then it needs to be manually underwritten, which means a computer, no way in hell is a computer going to say, yep, I'm going to stamp approval on this thing and alleviate the underwriting from being able to, cover their butt that this is a saleable loan on Wall Street. No way they're going to be able to do that. So now they have a manual underwrite option, right? So the computer says no. Will the humans say yes? They can, but if you have any late payments in the last 12 months and it's going in front of a human, then that's like where they're going to have to say, oh, no, it's not going to work because you have a late payment within the last 12 months, unless we can provide a valid explanation for it. And in this case with the 468 credit score, the valid explanation was it was a divorce situation. Those weren't his debts. He was not obligated to pay those debts. And so even though they had a bunch of late payments on his credit report, we were able to give a viable explanation that passed underwriting. And so somebody with a 468 credit score ended up owning a house with no money down. The other thing that was interesting about that transaction is he also didn't put down earnest money. So he literally got into the house with nothing out of pocket. Now, you should put at least $1 for earnest money. Why? The reason is if you don't have consideration of at least $1 on the purchase agreement, which is a legal document, without consideration, it's not legally enforceable. So if the seller decided to back out at any moment, they could have, because they did not have a legal contract because there was no consideration. And consideration requires the minimum of $1. So typically, earnest money is going to be a lot higher. It's usually going to be something like 1% of the purchase price. So if you're buying a $500,000 house, you're putting $5,000 in earnest money. But it's negotiable, right? And so if you're doing a program like VA or USDA or some other down payment assistance program, where you're going to be getting into the property with very little money down, well then that can be explained to the seller, like, hey, this person's financing the whole deal, and so they only want to put a lower amount of earnest money down. But that works the other way too. Let's say you're a cash buyer, you really want the property and you want to basically stave off any of the competition. Say, all right, it's a $500,000 house, I'm going to be buying the cash anyway, so what if I put $100,000 or $200,000 or $300,000 in earnest money down to let the seller know I am dead serious that I'm buying your house. So that's a couple of different ways to use earnest money. I get way too many notifications. I just got a brand new computer. My old computer died on me last week, and I got this new computer set up, and so I'm still getting used to it. And I got to turn off notifications and do a whole bunch of updates and all that good stuff. But some of the fun things with a new computer is my old one wasn't touch screen, and this one is. My old one, actually, this thing doesn't have. Have you seen this? Does your computer have a plug-in for Ethernet so you can wire your connection?
Yeah, mine does.
See, my old one did too. This new one doesn't even have that.
Well, I think people expect you're plugging into a hub now. So with all the split monitors and everything else. So like
okay.
on my office desk, I have a hub and everything's plugged into my hub, and I just USB my hub into the laptop and everything's all wired up.
Oh, I bet I could do a USB into the modem, or not the modem, but the router. So anyway, I'll geek out with that later. But yeah, that's kind of interesting. I was like, where the heck, anyway, so I keep getting older, technology gets more confusing, and I do my best to keep up, and I get old man eyes, but definitely want to shout out. We got 10:51 in this. Thank you for the likes. We got 10:51 in Central Time, which means we have 9 minutes left to ask any questions from a couple loan originator pros, and we have Alex here, is a real estate agent as well. Question: for someone with no credit, will a credit supplement work on a VA loan requiring a credit score? Here's the deal: you don't need a credit score to buy a house. If you've been making payments to three things over the last year, we're just going to prove those payments, and it's called manual trade lines, or alternative trade lines, or whatever they're going to call it. But here's the deal: you probably have a Netflix subscription, you probably pay rent, you probably have car insurance, you probably have a cell phone, you probably have a gym membership. So whatever you have that you've been making payments on for the last 12 months, you just need three of them, and we're going to be able to use that instead of a credit score to help you buy a house. So appreciate the question there. Just text once more, sport for long message on the text. Let me see what I got here. Oh, gotcha. Yep. I will read it and get back to you in a little bit. So I appreciate that. Appreciate all the comments today, guys. It makes it a lot more enjoyable on this side of the camera to have some participation. Makes the hour go by. Crystal, good to see you again. Hopefully we'll see Crystal this afternoon on the 4 o'clock hour, but I know she's been busy with some stuff. So we shall see. Either way, I'll be on because I don't have anything better to do. She says, nope. I forget what my question was. Nope, you're not going to be on it? Probably. So that's fine. I'll be on either way on the 4 o'clock hour when I do mortgages in the afternoon at 4 p.m. Central. So I'll definitely be back if you guys have any questions. If you want to come back or if you want to share this with anybody else, definitely do so, and happy to answer any questions. Question here: does earnest money deposit lock in the seller? So the earnest money is just going to be held at the escrow company, right? They're going to hold on to it, and it's basically like you're promising to perform on the deal. So you can't just back out for no reason. Otherwise, you lose those funds. And then for the seller, the more earnest money that you put out on the line, the more serious you are as a buyer. So that's where I was kind of saying, if you were putting very little money down for the earnest money versus somebody coming in and putting a lot in that earnest money, they know that you're going to perform on the contract and you're not going to walk away from that money. You want the house. That's what you're saying with the earnest money. Can the seller back out? Sometimes, but typically they have to perform, and you can actually sue them for performance because it's a legal document. Now, in the example that I was given with that VA buyer that didn't have any consideration for the contract, it made it non-enforceable. So seller could have walked at any time. Thanks for sharing your experience and helpful people. Many blessings to you all. Thank you, and Merry Christmas. It's that time of season now where we're going to definitely be getting that stuff going. Are you done shopping? You did your Cyber Monday? You went crazy Black Friday. What's your situation, Alex?
I do all the working and my wife does all the shopping.
Yeah, that's been our division of labor as well. But I actually scroll TikTok quite a bit, and I don't know, for all you guys here that are scrolling TikTok, you get that TikTok shop, man. The stuff doesn't come right away. That's one thing that I'll have to say about it. I ordered that. You know what I'm talking about? The super box, the thing where you get all the channels for free. I think I ordered that like 3 months ago. Never showed up. So I got to see what's going on there. But I'll sit there, and there's so many cool things that you see on the TikTok shop. What a great way to stocking stuff for Christmas, to get a whole bunch of little doodads. I caught a really neat, hopefully my kids aren't watching this, but I got like this really neat pen that like makes like an outline. So the color's on the outline of whatever you're writing. I don't know. Look really cool. But, a bunch of that stocking stuffer stuff, great way to get it is just scroll TikTok and buy everything in sight. But Yeah, that's all I do. I do some impulse buy, but all like the intentional buying stuff is done by their mom, and not Santa Claus, to be clear. Um, but I think Santa Claus has something to do with it. I don't know. It's I think he's like the union boss, something like that. But yeah, we got a few more minutes for comments, questions. Hopefully, I answered the question there on the earnest money. But if I didn't, ask it again, and I'm happy to give it another run. Alex, any last thoughts for before we wrap up this morning section of Mortgage Talk?
I was just going to say, if anyone's waiting for the Fed to make more announcements, don't, because usually the market adjusts as far as mortgages prior to their announcements. And then once they announce, it doesn't ever come back as good on our end. Like right now, rates are going down.
Every single time it seems that way, but I will push back on that. Once we get Jerome Powell out of there, he's been very negative on interest rates.
Yeah.
So he's not going to be there past March. So I think after March, we might start seeing it go the other way, where they're getting more aggressive than expected. How soon after joining the military can a soldier use their VA entitlement? VA entitlement is earned. So I know if you get into a combat area, I think you can get it with as little as 1 month. It's been a while since I looked at all the requirements, but the quickest way is to be in active combat. The slowest way is if you're in the National Guard. You have to do it for 6 years, and you can't miss a single monthly exercise. But all the buddies of mine that actually went into the National Guard, they have such a blast doing those monthly exercises that a lot of them end up qualifying just because they're like, sweet, I get to go and do this really cool stuff, working with, billion-dollar equipment, flying in these helicopters and shooting all these guns, whatever. They're having a good time playing cards, hanging out with buddies most of the time, but they're also keeping us safe, right? So they're out there doing a good job. So those are the two, that's the range. Typically, another way is if you've served at least, 2 years and you're medically, discharged or something, then you still earn entitlement. So there's a lot of different things like that. It's definitely on the website, so I could go back and look at it. But if you go to va.gov and look up, that exact question, that's where to find it. But I've done a ton of VA loans over the years, so I should know it. I know a little bit as I'm demonstrating right here off the top of my head, but there's a range to it, and it's kind of like if this then that. But you want to earn your entitlement. If you're gonna get in and you're gonna get close to your entitlement, make sure you get your entitlement, because that is so valuable. And then if you have any injury at all in service, where you're considered any disability, then you waive the funding fee, which is the only kind of mortgage insurance type expense that exists for a VA loan. So if you get that waived, there's no cheaper loan on the planet than a VA loan with no funding fee. So that's definitely a good option. And the thing that a colonel told me, I did a loan for a colonel out of Missouri some years ago. He's like, if you ever want to help a service man or woman that wants to apply and approve for a disability while in service, have them get their hearing checked, because apparently there's enough ambiguity in that to where you can say, shooting all those loud ammunitions could affect your hearing. So that might be an easy way to get rid of that funding fee for those folks. Also do a sleep study. Those are the two that I've heard of that work really well at earning the disability portion of your entitlement. Does funding fee only apply to disability? So the funding fee is going to be charged as part of a purchase or refinance on a VA loan, depending on how much equity is going to be placed in it. If it's first time use or secondary use, So there's a little bit, it can be as high as 3.3%, and it can be as low as 0.5% on a refinance if you're doing like a VA IRRRL where you're just lowering your interest rate. But it gets waived if there's disability. And then the interest rates, if you didn't know, interest rates for all government loans are typically lower than conventional conforming rates. So as I was just shouting out 5.25 with 1 point on an FHA deal, if I were to reprice that as a conventional conforming, the rate would be higher. So that's the benefit of working with some of these government loans. The government insurance is so protective to the lender that we're willing to lower the cost to the consumer. So they're good options. They're really good options. Is 2.25 fixed 30-year rate good to keep? Now, it's going to sound like a knee-jerk answer is like absolutely, because that rate is lower than the market rate. You want to keep that interest rate. But, and this is a big but, if you have a ton of consumer debt that you're carrying around at 20% interest and you have a blended rate of that 2.25 and a whole bunch of 20%, and I'm able to take that and look and say, you know what, you're with all of this debt, you're paying 8% blended rate. We could refinance all of that into 6% or whatever, much lower interest rate, maybe into the fives, lower the cost by a ton. You know, typically a debt consolidation deal, I'm looking at between $500 a month savings to over $2,000 a month savings. And it's true where it might have only taken you 5 or so years to pay off the consumer debt, but when it's stretched out over 30 years, you have a much lower payment. And then with that added savings, if you wanted to keep true to the 5-year plan, plow that savings at 0% interest over your minimum payment, and you're going to have a lower blended rate because you're going to be accelerating the payoff. So HELOC would be okay. I have over 300,000 equity. Yeah, HELOC is a good option, but like I say, again, you'd want to know what your blended rate is. So if you have other consumer debt, that's the first thing I'm going to be looking at. We might look at a HELOC. We might look at replacing that first mortgage. So couple things to consider there. HELOCs typically have interest rates that are going to be tied to the prime, the federal funds rate, and that's probably going to keep coming down, but right now those interest rates are still a little high. So something to keep in mind. But with that, we're a few minutes over. I appreciate all the participation. Like I say, I will be back on at 4 p.m. Central. But for right now, so you got to offer at 7.35, 30,000. That sounds about right. And it's going to be tied to prime. So when they lower the federal funds rate again, they were going to do that here in December. It doesn't sound like they're doing it now. Are HELOCs fixed or adjustable? They're typically adjusted to the federal funds rate, which means they are going to adjust multiple times per year. But right now, it's looking like if they adjust, they'll adjust down. So if you're good with the 7.35, that's probably okay. And then so with 30,000, yeah, I think the math. I think you're in the right realm there. I'm just trying to think if there's enough debt there where a blended rate would make sense. What's the balance on the first mortgage? That's what I would need to know. Home equity line of credit versus home equity loan. So that kind of goes together with the question, is it fixed or adjustable? You can get a straight amortized loan as a second mortgage. $295 with 300,000. Oh, okay. So the house is worth $595. You owe $295, and you're getting a $30,000. Yeah, you're doing it right. So GISINWV. You're doing it right the way that you're doing it there. You have the bulk of your loan at that 2.25, 30,000 in debt is. You're definitely not going to blend the rate high enough to make sense to change the first. And then see, HELOCs are typically interest only for the first 10 years, and then they fix in for the remaining 20. Or you could refinance it. Another thing to think about is a HELOC, you only pay interest on the balance that you owe. So as you pay it down, even though the interest rate stays the same, your payment goes down. Hopefully that makes sense. I'd be able to unpack that a little bit more if I had more time. But home equity line versus home equity loan, you can have a straight loan just like a first mortgage that you're not able to re-borrow against, right? So let's say you get a $50,000 home equity loan, then you're just getting it for $50,000, and it's set up like any other installment loan, like it's a car loan, like it's a mortgage, like any other installment loan, and you can't borrow anything against it. Now the home equity line of credit, you can get it set up, you can borrow against it, you can pay it back, you can borrow it again, and you can use it in a much more flexible way of doing it that way. But again, the home equity line of credit, you're only paying interest on the amount of money being borrowed. So if both things are true, and you're going to borrow $50,000 of a HELOC or $50,000 of a home equity loan that's going to be amortized through the whole thing, I am going to favor the home equity line of credit, because as I pay it down, I'm going to be paying less interest. Hopefully that makes sense. We can unpack that more later, but we are over the hour, and I have closings and I have loans to submit. And see, what are the typical term on a HELOC loan? The typical term is interest only for the first 10 years, and it's typically going to be in the 7s for an interest rate, and that'll adjust to the federal funds rate. So when you hear news where they raised the rates or they lowered the rates, whatever they raise it by, if they raise it a quarter, if they lower it a quarter, that's how much it's going to change your interest rate. So wanted to definitely get that answered, and I thank you guys for all the questions. This has been a very fun hour, very interactive. Any last words, Alex, or we're gonna bounce out of this thing?
I appreciate you having me on, and great stuff today. And
Awesome.
Call me later on. We'll discuss next week's details.
Oh, that's right. It's next week. It's coming up fast. So looking forward to that. And thank you guys for thank you for the roses, Neil. I'll definitely be reaching out. And we'll see you next time.